Okay, let's take a look at example 1. I will walk through review the thinking process to get the answer for example 1. Before we begin, let's think back what is the formula for owner's capital. Owner's capital is actually total assets minus total liabilities. Whereas for working capital, a little bit different, is current assets minus current liabilities. So we're going to use this to help us out to find out the effect of the transaction from A to G, the effect on the owner's capital and working capital. For example, when you're looking at transaction A, you must think in terms of double entry. Deposited 100,000 in the business bank as capital. So what is the double entry for this is, first of all, your bank actually will plus 500,000. Bank is actually current assets. Okay. Next, for your capital, for capital, we will usually just call it as your C, which is for capital. Then you ask yourself, if I want to look at the effect on owner's capital, the formula is actually assets minus liability. Bank is a type of assets, so your assets increases. There is no liability in this question, so we will write this as owner's capital increase by $100,000. Okay, next, when we move on to effect on working capital, bank is actually a type of current assets. There is no current liability, so this will be the same as the effect of owner's capital. So for this question, there is no difference. It is actually increased by $100,000. Next, we are going to look at transaction B. So now you have to go and take a look at the double entry for transaction B. If the business bought a machine increased by $30,000. So again, ask yourself what a machine. Machine are actually our non-current assets. When you buy machines, ask yourself, have we paid for the machine? Since the question said bought a machine on credit from Lim Limited, who is Lim Limited? Lim Limited must be our supplier. So if we buy on credit, we have not paid them the money, we will call them our payable. And they are our other payable, Lim Limited. So Lim Limited, do we owe them more or less money? So we are owing them more money. How much we owe them? 30,000. And other payable are our current liability. So now if you look at the effects on owner's capital, ask yourself, what are your assets? Your assets include your machine. So machines, 30,000 assets. What are your liability? Lim Limited is actually our liability. You minus 30,000. So what is the net effect on owner's capital? The answer is 0. So normally we will write no effect. Now if you were to move on to working capital, is there any current assets in this transaction? There is no current assets. So current asset is actually 0. is there any current liability? Yes. 0 minus your limited, which is 30,000. You end up getting 30,000 as minus. Then we will write this as decrease by $30,000.